Today I'm going to share with you guys the 3 stocks that I believe have huge potential to pay monster dividends over years to come. I'm going to show you my whole thought process on how I figure this out, and I cannot wait to share this with you guys today. Good day, subscribers! Thank you so much for joining me today. I am Jeremy. This is the Financial Education Channel, and today we're talking my 3 stocks that I have figured out could pay huge, monstrous dividends for years and years to come. And I'm going to share with you guys my whole thought process on how I figure this out, how I look at it, and the process is actually pretty simple. It's not super in-depth. So I'm going to really enjoy sharing this with you guys today. If you like dividend type videos, hit that thumbs up button. If you haven't subscribed, go ahead and hit that subscribe button now because I share a lot of tips about the stock market that I use and whatnot. So let's get right into this guy. On your screen now, you should see Apple. Apple is the #1 company, in my opinion, that has the ability to pay huge dividends for years and years to come. It is disgusting the amount of money they're going to be able to pay out in dividends for years to come and what they can already pay out. So, Apple, the first thing I like to look at if I'm looking in, remember, this video is just about judging dividends and how much a company has to pay for dividends in the future and how much they can afford, those kinds of things. So we're not going into depth on what's a good stock and those kinds of things. We're strictly sticking to dividends. So we're on Yahoo Finance here. We're looking at Apple. The dividend yield we see is around 2%. We see they pay out about $2.28 per year, that's a per year number, in dividends to the shareholders currently. Their current EPS is about $8.58. So they're paying out about $2.28 per share in dividends per year, but they're making about $8.58 per share in profit right now. So their profit, their EPS, is way outweighing what they're paying for dividends. So you can see if they really wanted to jack up their dividends to, say, a yield of 4%, 6%, something like that, and increase that dividend to paying out $4, $6, something like that, they could easily do it and still have a lot of money in the bank. They could still be having way more money left over. But the next key and the next thing we're going to look at is where's their income coming? Where's their profits going and those kinds of things? Because if we're just investing in a company that's stagnant, that's not good. And if we're investing in a company that's profits are actually going down, then that's a bad sign, and that may not be able to, the company might not be able to raise that dividend over time, which is what we're looking for when we're looking for a dividend stock. So let's go ahead and look at their income statement here. As we see, all the way to the right-hand side, that was 3 years ago, they did $37 million. 2 years ago, they did $39 million in profits. And last year, they did $53 million in profits. So you can see that their income, their profits is just getting more and more. They're becoming more and more profitable, which is phenomenal for judging this because we need a company that's profits are just being pushed up and pushed up, because then that means the company will have even more ability to raise that dividend in the future. And raise it and raise it and raise it. So when I look at Apple, I see a company that as long as they can keep doing what they're doing now or better in the future, they have such an opportunity to pay out huge dividends for years to come and raise that dividends for decades to come. Each year, raise it a little bit. Another year, raise it a little bit. Those kinds of things. So Apple is the #1 stock, I would say, that has the most potential if you want to collect dividends for years to come or decades to come. And of course, you've got to look into the business and all those kinds of things and judge the business as well. But for this video, we're just looking at dividends and trying to judge it very simply. Next stock up, we're looking at Google. Now, I kind of cheated on this one because Google doesn't pay dividends currently. They pay no dividends. They have no dividend yield, as you see down there. They've never paid a dividend. I think Google is going to pay a dividend very soon. I would say within the next year or two, Google will be paying dividends. I see how much money they have coming in, and they're not using it for pretty much anything. They're kind of like Apple used to be back in the day when Apple wouldn't pay dividends or do share buybacks or anything like that. And Apple just kept banking money, banking money. Google's the same way. Google has a lot of potential. I was looking at their income statement, and I saw in their their balance sheet has like, I think it was 60 billion or something ridiculous in short-term investments. They have a ridiculous amount on the balance sheet. But let's look at EPS. They did over $25 in EPS last year, 25.8 or $25.81 in earnings per share. So they got a lot of money coming in, and they're paying no dividend currently. Let's see what their profitability is. 3 years ago, they did $12.7 billion in profit. The next year, they did $14.1 billion in profit. And last year, they did $15.8 billion in profit. So profits are just getting more and more for Google. They're just becoming more and more profitable as years go on. And that is a sign to me that this is a very healthy company. That's a huge corporation. They got way too much cash in the balance sheet. They got way too much profits coming in to not start paying a dividend now or doing a share repurchase or something, but definitely pay a dividend because the shareholders are going to start demanding it. They don't want all that cash just to sit there forever and ever. That's what Apple did for a long time. Then Apple finally, around 2011, 2012, they're like, okay, well, let's start giving this money back to our shareholders now. This is what I view Google will do very soon. I believe the pressure will be put on them to do this. It makes no sense not to do it. It really doesn't. You have more cash than you could ever use on that balance sheet. You have more money than you could possibly use coming in for profits, and you're just becoming more and more profitable. I see Google paying a big dividend very, very soon within the next year or two, and they will be able to raise it for years and years to come as long as their business just keeps increasing and increasing. Stock number 3 on your screen now is the Home Depot. A retailer made the list today. Now we see they pay out a pretty nice dividend right now as it is, around a 2.2% yield. They pay $2.78 in dividends per year, per share. So, and their EPS is a little under $6, $5.91. So they're earning over double what they're paying out in dividends currently. So they're definitely a company that has all ability to pay out a lot more in dividends if they want to. But let's go ahead and look at that profitability. Where's their profitability going? You see, 3 years ago, they did $5.3 billion in profit. The next year, they increased $1 billion more in profit, $5.3 billion. This past year, they did over $7 billion in profit. You can see this company is becoming more and more profitable. Their profits are just getting better and better as time goes on. And as long as they keep that up, they can raise that dividend a long way. They can raise that dividend a long way because retail, generally, when you build a store, and especially in Home Depot's case, there's not a lot of improving you have to do. It's not like you need to go renovate that store every 5 years or something. It's a very easy business. You build that store, and then what else do you have some money to spend on? Unless you want to acquire another retailer or something like that, there's not a ton of money to be used in retail. So a company like Home Depot, they can definitely afford to pay out way bigger dividends. Currently, if they didn't become any more profitable, they just stay stagnant, they can still afford to pay out way more. But the fact that they're getting more and more profitable as these years go on, that just means they're going to be able to raise that dividend and again and again and again over years to come. So these are 3 stocks I'm looking at. Apple, Google, Home Depot. Google is the only one that doesn't currently pay a dividend, but I think they will pretty soon. And all 3 of those just have a ton of ability to raise those dividends as time goes on. I hope this helped immensely, guys, in understanding my thought process on how to judge a company that I think can pay a lot of dividends in the future. And leave a comment in the comment section if you enjoyed this video. Hit that thumbs up button. And if you haven't subscribed, you may want to. I talk a ton about personal finance, business, entrepreneurship. I'm an entrepreneur, so I talk a lot about that. And I talk so much about the stock market and do dividend stock videos like we did today. Thank you for watching, guys, and have a great day.